Grubhub opened at $40 a share. It was priced at $26 a share yesterday. That was at the higher end of its marketed range. Grubhub is the owner of Seamless.com, which allows you to order food online. Everyone seems to be doing it these days, and perhaps that's why the company was moving to market. We should note that the company makes money by charging restaurants a commission. It was a $192 million IPO. And the question here, I have heard Leslie Picker, who was one of the people who were covering this for Bloomberg News, is, was this company priced as a consumer stock or as a technology stock? And she was saying that within the prospectus, Grubhub had named a lot of brick-and-mortar restaurants as its competitors, yet when it came to pricing the actual IPO, investors were looking at it as a tech company.
Question I have for Leslie Picker is, who's the guy in the pizza costume?
I know.
Because he was pumped.
What is it with the mascots?
I know,
GrubHub, Candy Crush.
King Digital, yeah, went public, and that was a debut that was quite the opposite from Grubhub, in fact, and they did have a lot of those candy guys roaming around the floor of the New York Stock Exchange to try to keep the mood kind of buoyant here.
But in all sincerity, I mean, you have to think about this. Think prices in the mid-20s, and it breaks at a $40 price. The bankers who advise them on this have got to be hiding their faces right now.
Yeah, and no doubt.
I mean, that's a ton of money to leave on the table.
Well, the other thing also is that its rival, one of its rivals, is Just Eat. And this is a company that rose 9% in its trading debut in London as well. It raised about $600 million. That was the biggest e-commerce IPO in almost 3 years. So in comparison, Grubhub is fairly small in terms of the actual amount that it raised.